Stocks stay range as early earnings present a mixed picture. Realty and consumer durables lose ground, while capital goods and energy eke out gains. The mid-caps underperform.
RBI wraps Kotak Mahindra Bank for inadequacies in its IT infrastructure that has led to frequent outages by asking it to stop onboarding customers via online and mobile banking and from issuing fresh credit cards. Experts expect the resolution taking many months to resolve the stock slumps. A surprisingly strong interest margin and improved asset quality lifts the Axis Bank stock, but Hindustan Unilever sulks on providing a muted outlook on the back of mostly in-line numbers. And the Birla Group chairman Kumar Mangalam Birla is confident that Vodafone Idea will make a strong comeback after its 18,000 crore rupee fundraise. He also dismisses any talk on sale of shares by the government. Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu. Well, it is a day of consolidation after 4 steady days of gains, so no complaints really coming in for the markets. It's okay, we're taking a breather. The Asian markets did take a bit of a breather as well in today's trading session. But nonetheless, it is a lot about stocks, and we've been pointing that out since last evening. That it is going to be a results-heavy day. We have ACC, IndusInd Bank, Bajaj Finance, TechM, Nestle, Emphasis, a couple of numbers which will be coming out. There are a slew of numbers otherwise as well. And separately, a lot of data to watch out for. We have the Thursday weekly jobless claims from the US, GDP data from the US today. And tomorrow, we have the all-important March personal consumption expenditure index, which is basically the key inflation data that the Fed looks out for. So I think that's going to be important to watch out for as well, Mangalam.
Hi, Ekta. And not to forget that we will have the April series expiry today as well for the market. So that's something that will play out in the second half of trade. Yes, we are consolidating, but, you know, it's not particularly a bad day, largely because we've recovered about 100 points from the lows on the Nifty itself. The first test of the 20-day moving average has been defended by the bulls. And what could have easily been a red market because of Kotak Mahindra Bank is now a greenish market despite Kotak Mahindra Bank. So that's a positive from the bull standpoint. More stocks advancing than the number of stocks which are declining. And one of them, which is running hard, is MAS Financial Services. The first management on the show today, the stock surging in trade on the back of a strong set of numbers. One should say yet again, because disbursements came in strong at around 2,900 crore rupees. Kamlesh Gandhi, who's the chairman and managing director of the company, joins in now. Thanks a lot, Mr. Gandhi, for joining in. Quarter after quarter, we've been speaking to you, and you have said that, you know, you're positioned for 25-30% sort of growth. 10,000 crore AUM is something that you will do in FY24 itself. You've gone ahead and done it. I presume that you are looking at 20+% growth for FY25 itself. But I won't steal words out of your mouth. If you could give us a sense of the near-term guidance that you have with regards to AUM growth, with regards to asset quality, and with regards to NIMs.
So thank you so much. Nice to reconnect. So as you very rightly observed, that once again a very consistent quarter. This has been our 116th quarter of consistent performance. So this is in lines with our fundamental belief that consistency and steadiness take you to your destination fast than any other thing. So coming back to the performance on the year, it was a very satisfying year, so to say, with a rating upgrade to AA- from A+, very deservingly so, and crossing a 10,000 crore mark, and also one more milestone of crossing a consolidated profitability of 250 crores plus, while maintaining the asset quality and the capital adequacy at very high level. Capital adequacy stood at 24% as I talked to you. Coming back to your question on 24-25, once again, the same fundamental will grow consistently but solidly, anywhere between 20 to 25%. That has been our belief. That is the lending institute to grow at 20 to 25%, which doubles your AUM every 3 to 4 years, is the right way to grow in a fundamentally strong manner. So once again, confident of posting another 20 to 25% growth this year.
Okay, all right. Confident of posting a 20 to 25% growth. Mr. Gandhi, welcome to the show and congratulations on what has been another healthy quarter for you. Just wanted to, dwell a little bit on the asset quality because that has seen a marginal worsening which has taken place in the quarter. Gross NPA 2.25 versus 2.23% Q on Q. Gross NPA absolute levels is up around 9% odd. Was there any kind of stress that you all faced, say from the rural market as well?
No, the borrowers whom we serve, mainly into the informal class, we've always been sharing that the NPA will be range bound. So our guidance is that our gross NPA will remain anywhere between 2 to 2.5%. The net NPA will be anywhere between 1.5 to 2%. Very difficult to give a decimal to decimal point prediction. But if I share our experience with the borrowers, we are quite confident about their repaying capabilities and the quality of the assets going forward. So all in all, the asset quality is well under control. A few basis points here or there is the nature of the borrowers whom we serve.
Gross NPA between 2-2.5%, net NPA between 1-1.5%. I presume you will maintain your NIM guidance of 6 to 7% as well.
Yeah. So gross NPA between 2 to 2.5, net NPA between 1.5 to 2, and NIMs of around 6 to 7%.
Right. I just wanted your thoughts on, this scale of performance that you've been doing over 110 quarters, like you've pointed out. This consistency, while it is remarkable, one also wonders at some point maybe there could be some risks that one would foresee, right? So from your standpoint, what are the risks that you see to this growth, that the growth path that you're on? And at some point, would you, when you see those risks, maybe look at lowering your growth to maintain, your business metrics?
Yes. So I think we are a great believer that the growth is also to be discovered rather than always determined. And if you take, if I give you one example, during COVID, we were the ones who grew our balance sheet by around 12%, only because we were not confident of lending during that time. So while we are very confident of the fundamentals, the market size and our distribution strength of growing at 20 to 25%, we also take into account in prioritizing profitability, quality of the assets we create and growth. It is not growth at any cost, because I personally believe that markets are there to stay, very important for us to be there. And that is what we demonstrated during COVID also. During COVID, as I shared, we degrew, but later on we got the opportunity to recoup, and we are back on track on a 20 to 25% growth.
Okay. Well, just before we, I ask you about your AUM breakup and what you're guiding in terms of sectors, I just wanted the cost of funds for you from this for this quarter, and what is your probable range or guidance for the coming quarters?
I think if you see, as compared to Q3, we have marginally improved on our cost of fund, despite the rise in MCLR. And with upgrade in rating, we are very optimistic that the cost of fund will hold on or reduce within next 2 to 3 quarters going ahead. Currently, we are at around 9.82% in our cost of funds, which is historically higher by at least 0.75% over all these years what we have been borrowing at, because of the recent hike in the repo rates and then the transmission thereof. But we are confident that we'll be in a position to hold on to this rate, and then gradually within the next 2 to 3 quarters, we'll see reduction in our cost of borrowing also.
Okay. Now coming to the two segments, micro enterprise as well as two-wheelers. If I look at it on a Q-on-Q basis, it's flat when it comes to your assets under management. Is there some caution there?
No, that is, as I told you, that is the nature of the market on quarter-to-quarter basis. Depending upon the opportunity we get in the market, Q3 is usually a festival season, whereas Q4 is slightly muted as compared to Q3 in these two segments.
So if I look at, the AUM of your commercial vehicles, which have grown 100% year on year, your salaried loans, which have also increased about 90% year on year, along with two-wheelers. So these three functions, so the wheels portfolio is close to around 13.5% of your AUM, and salaried is roughly about 5.5-6% of your AUM. What kind of growth do you see in these three areas over the next couple of years? How much do they become as a part of your AUM going forward?
See, as you know that we have been predominantly an MSME-driven company. Last year, our total contribution from MSME was 87%. Which is close to 81% right now. And going forward, we would like to be a well-diversified asset-based company. And within next 3 to 5 years, we see the contribution from wheels anywhere between 20 to 25%, from salaried personal loan anywhere between 5 to 7% or less than 10%, and the rest coming from our MSME portfolio.
And what's your branch opening outlook for the next 1 year? You had a target of 225 by the end of FY24, as well as fintech tie-ups and direct distribution. If you could give us numbers on that.
So on a consolidated basis, we already reached there on our branch distribution. We are at 189 on our parent and around 65 branches in our subsidiary. So we are already there at around 225 plus branches. And I think in this year, we will be on a consolidated basis, adding anywhere between 30 to 35 branches this year.
Okay. All right, Mr. Gandhi, we're going to leave it on that note. Again, congratulations on what has been a good quarter. The stock is reflecting it. The stock is up around 6% at this point in time. Thanks very much for joining in and speaking with us. Well, we need to take a short break, but on the other side, Manisha Gupta will join in. She has with her Kunal Shah, Head of Commodities and Currency Research at Nirmal Bang Commodities. Stay tuned.
Welcome back, and joining us on the show now is Kunal Shah from Nirmal Bang. Kunal, hi, good to have you. And, the dollar has seen a bit of a decline, trading below 106, and that's given a fresh life for many of these metals, which had started to kind of consolidate, even see a bit of a profit taking. And the street now is waiting for the first quarter GDP numbers and the PCE data from US. Ahead of that, we've seen a bit of a buying comeback in many of these. I want to start with copper trading at a 2-year highs. Where do you see the prices move from here?
Well, the bull run in copper started with all the smelters in China cutting their production. And then after that, we've seen in last 15 days, 2 mines cutting their production. So I think the rally of copper right now is all about the supply side weakness in the ore market, copper ore market. The copper concentrate market is looking very tight right now, and that is causing the prices to move up. If you look at the premiums in China, the premiums is clearly indicating that the demand is not aggressively coming at this rate, but it's a supply side story. And with the combination of that, we have rate cuts. So expectation of rate cuts. So everyone is waiting for bad data. You saw the US manufacturing PMI numbers declining, and immediately everything went up. So like you rightly said, today we have US GDP numbers, tomorrow PCE data. I'm not expecting any major negative surprise in PCE data, but any soft number, US soft GDP number will definitely cause dollar index to weaken, and again the expectation of rate cuts will build. So I would broadly say that mainly the major trigger point will be US GDP data, and on the basis of that, we are going to see another rally or downside. My guess is from here, the upside is limited for the time being. I'm not expecting a major run-up from here in near term. Consolidation is something what I'm expecting right now. And if you ask me 3 months, 4 months down the line, what will be the possible trend? That is definitely looking pretty positive. So broader trend still remains strong, but in short term, we may see some consolidation to downward correction if the US data is positive.
Not just copper, because we've seen gains in aluminum and zinc also. These are also trading at multi-month highs. The kind of run-up euphoria that we've seen in copper seems to be spilling over to other metals. Do you see an equal amount of strength in these as well for a broader, longer-term period?
Aluminum also, because of the sanctions being put on Russia, I think aluminum will also remain pretty tight as far as the supply side is concerned going forward. And see, the major narrative right now is rate cuts. Whether it is going to be delayed or whether it will come on time, that is one thing. But there is one thing is very clear, that rate cuts are coming, maybe in June, July, August, September, anywhere. And if the rate cuts are coming, the monetary easing cycle is beginning. So that is always going to be bullish from the macro point of view. So whichever metals are fundamentally relatively strong, like copper, number one, strongest, second will be aluminum, third will be zinc, fourth will be lead on MCX. That is how it is going to perform. So two metals relatively looks strong to me fundamentally from the supply side is copper and aluminum.
Okay, noted that. So that's about the non-ferrous metals. Coming to the ferrous metals, and we've seen good amount of strength here too. Steel is surging up. Iron ore is trading at a 6-week highs. Here as well, it is China which is looking at stocking yet again. There were some positive statements about state governments now looking to push the pending projects in sense of infrastructure. That is where the steel and iron ore demand seems to be coming in from.
Yes, so everyone has written off China 2 months back. No one was saying that the Chinese real estate market is weak, metal should not go up. And suddenly we see China stabilizing and the built up of rate cut expectation. These two are the main drivers for commodities right now. Any commodity, you name any commodity, and the major reason why everything is rallying right now is the main is expectation of the change in the monetary policy by all the Western central bankers. That is the major issue. And second is China stabilization. So we've seen Chinese stock market also, I think, have risen by more than 10% in last 1.5 months. So a sense of stability in China coupled with the macro factors like expectation of rate cuts. And third is the supply side story going on in a lot of these metals. So even ferrous, for that matter, we've seen China's steel production is declining right now, and that is basically lifting the prices of steel. And if you look at iron ore also, iron ore prices have rallied by almost 15%. So stronger steel and iron ore prices will also lead to higher ferrous metals also. In India also, ferrous metals should do well going forward. Stronger demand, stronger growth expectation, and curbing imports. So if right now we've seen the Chinese import, if China's production is coming down, then the Chinese imports will be also taken care of. So even ferrous metals looks quite positive going forward.
A final question then on precious metal prices, Kunal, and we have seen prices see a bit of a profit taking from its highs. But at these current levels, do you think this is a good time to start accumulating, or one should wait for further dips?
Gold about $23.50 doesn't look bullish in shorter term, and I don't recommend to go fresh longs at these levels. Everyone, after we've seen a rally from 2,000, 2,400, everyone has upgraded their target to 26, 2,800, $3,000. But I don't think so. This is not the time, you aggressively buy gold at these levels. Most of the positive fundamentals are already priced in. So in a shorter term, I'm not expecting any major rally from here. It requires more trigger, any major deterioration in the geopolitical landscape or something like that. So about 2350 to 2400, these are the levels, I'm not bullish right now. As per me, in shorter term, it can decline. It can again retest 23, 22, $90. And then perhaps after that, you see some stability and then it will go up. But in near term, I'm not very bullish on gold.
Okay, all right, Kunal as well as Manisha, thanks very much for bringing us that update with regards to the commodities. Well, for the equities, it's a very quiet trading session. Just want to point out there are specific stocks. So something like a Spark is down for the 10th consecutive session in a lower circuit. So that stock is now below 300 odd rupees, 270 odd rupees for that particular counter. And even something like an Aster DM, which went ex-special dividend earlier this week, is down around 3 odd %, and do watch out for that particular counter. Well, we need to take a short break, but up next, Mangalam will put the focus on F&O cues. Stay tuned.
Absolutely quiet for the market. Good recovery from the lows, but the important part will be the second half of today's trading session, where we will have the Nifty April series expiry today. And ahead of expiry, what's actually risen apart from the market from the lows is India VIX. You remember 2 days ago or 2.5 days ago, we had the India VIX see a sharp decline of 20% going towards levels of 10. And then we pointed out that time that, the 10 number is usually where the India VIX bottoms out. Over the last couple of trading sessions, the VIX has actually increased back to 11 with a big move from the lows, up 8% in today's trading session. So those who would have made calendar spreads on the day before would have made some money. But what's interesting is today's low on the Nifty, 22,305. and the recovery past the 20-day moving average tells you that there is a firmish bottom which is made for the market, at least for today's trading session. And that's given the writers of the 22,400 put a fair amount of confidence. In fact, the 22,400 put has the maximum open interest for a premium of 41 rupees, telling you that the first leg of support for the market, which is the 20-day moving average, is an important one to watch out for. Were we to decline from here, then maybe the fall would be much sharper, given the sort of 2.5 crore shares in open interest outstanding today itself. On the way up, the 22,500 call writers are equally active as well, with nearly 3 crore shares outstanding, telling you levels upwards of 22,520 may perhaps face some sort of congestion. Some punt buying at levels of 22,600, 22,700, hoping for maybe a last hour boom in the market. But the probability of that seems low until the Nifty bank comes to the party. Today's low on the Nifty bank, extremely important, again, coincides with the 20-day moving average of around 47,776. And despite Kotak Mahindra Bank, we have strong support coming in from the likes of Axis Bank, ICICI Bank and SBI. For the Nifty bank to blast in the second half, what do you have to watch out for? It's HDFC Bank. That could be the joker in the pack. So if that one comes back too, maybe we could see the Nifty bank move higher and those punt buyers at the 22,600, 22,700 call making some money. But until that happens, maybe a big surge in the market in the second half is unlikely.
Okay, all right, Manglam. Thanks very much for that. Well, we need to take a short break, but here's a programming note for our viewers. Our Friday special offering, Editors Roundtable, is now coming at a new time. Catch the biggest market headlines of the week with expert analysis from market veterans and our editors every Friday now at 3:30 p.m. Don't forget to tune in. We take a short break, but up next we'll connect with Jonathan Hunt, the CEO and MD of Syngene International, to discuss the performance for Q4. Welcome back. Well, we do have the Nestle numbers on your screen. The revenue is higher than estimates. Our poll was 5,180. It's coming at around 5,268 odd crores. And net profit, Manglam, that looks good. 934 crores as compared to our poll of 850.
Yep, it is a goodish set of numbers that have come in from Nestle. The reason why I say that is because, the revenues have grown higher than street expectations. We're just trying to calculate the EBITDA. This is the company having provided for some contingencies as well. But if you add all of that back, it appears that there is a bit of a beat on the EBITDA as well. The EBITDA margins have come in at around 25.8%. So that's a 310 basis points improvement over the last year. Though quarter-on-quarter gross margins is something that we'll be watching out for. The net profit, which has come in at around 934 crores, also includes an exceptional element of about 10 crores. So you take that off, it's about 924 crores. Despite that, it is a big beat to our expectations, and that's largely coming from the higher than expected top line growth, which has percolated down to the EBITDA itself, and that has come down to the net profit. So far, it's a good set of numbers that we have. The domestic sales for the company have increased by about 9%, again, at the higher end of what the street was anticipating. Nestle, for the last many quarters, has been reporting double-digit revenue growth. This time around, with a bit of a slowdown and a strong base, the street believed that the growth could be high single digits, and that's exactly what the company has reported. We do have Prakash Diwan with us. Prakash, 9% revenue growth on Nestle, slightly higher than our expectations. I believe the margins also have been higher than expectations, 25.4%. Street was working with a number of 24.4%, and that's percolated all the way down to the net profit. Having seen the stock move the way it has, with the headwinds that are there with regards to commodity prices, and at the same time the concerns around Cerelac, etc., with the valuations it trades, both bull and bear case for Nestle, where do you stand?
So I know I'm taking the safer middle path and saying I have a neutral stand at the current juncture, given the uncertainty around the Cerelac issue, because you really don't know how badly this could kind of impact it, or how long the remedial action would take. But if you focus purely on earnings, I think it's very impressive. Margins of 25% plus are definitely for a base like this, for a commodity, for a player like this with a scale like this, it's definitely very good. I haven't yet been able to go through the fine print whether there's any one-off that's contributed to a significant improvement in either revenue or on the profitability side, which percolates down. But otherwise, I think a net profit of 940 odd crores is definitely very good, especially after we've seen what HUL has come up with, and it's just kind of it is difficult for larger players to become larger. So there is definitely some sort of an element of beat out here.
So there seems no one-off yet, and most of their businesses across all platforms have done extremely well so far, and we've seen decent contribution coming from their latest vertical, pet care, which has been integrated into the company as well. And this is news that Ekta may find some interest in. Ekta, it's only poetic that it comes at halftime report where both of us speak about this. Nestle has actually entered into a definitive agreement to form a joint venture with, guess who? Dr. Reddy's, to take health science nutraceutical portfolio to consumers. This in light of, all that's happening in infant nutrition, a joint venture with Dr. Reddy's to deliver nutraceutical to kids.
And that's interesting because I think Dr. Reddy's is also, trying to strengthen their portfolio in these different differentiated segments within the Indian market. So I think that would be interesting. Nestle as well as Dr. Reddy's coming together. We have Naveen Kulkarni of Axis Securities joining in. Naveen, that's yes on the periphery, but I just wanted to understand how important is the commentary from Nestle for you today, considering the controversy surrounding Cerelac and the baby food. How important is that for, say, an analyst to hear in the commentary from the management, and how important is it to probably even determine your valuations or your call on the stock?
Yeah, I guess the commentary will be important to look at in terms of how they address the long-term strategic issues. Because of course, short-term impact on account of these things may not be very, very significant, but of course, long-term impact is something which they need to address. However, what we have seen with Nestle is that Nestle is a company which has a very, very strong product profile. They have been able to consistently churn out, improve their product profile, and ride the premiumization trends in India very, very strongly, right? So, and it's also been an outlier in terms of the overall performance in the FMCG space, right? Again, this quarter numbers have been better than our expectations. So overall, I think that Nestle is in a very, very strong position, and they should be able to address these issues very, very well and manage their long-term growth trajectory at a reasonably strong pace.
All right, Naveen, the stock trades at a premium to all the other FMCG stocks as well. So far, the growth has been higher. But now going into the next year, we will have a high base for Nestle, whereas others will start looking at a low or a favorable base coming in for them. At the same time, in the press release, there is no comment from the management on the infant nutrition issue. One would have thought of some sort of commentary coming in out here, but there's absolute silence on that. What is your call on the stock right now, and what is it that you are likely to move it to post any sort of commentary coming in from the management on the future?
So, of course, we'll have to look at the numbers in depth a little more. And see, we are overall structurally positive on the stock from a long-term perspective. And see, Nestle has seen multiple issues in its history. And the biggest was, of course, what happened in Maggi. And they were able to come out of that also very, very successfully, right? So I think Nestle should be able to manage these aspects pretty well and address these issues and come out on the stronger side. So that's what I tend to believe, and this time also should not be any different for Nestle, considering the kind of product profile that it has, and which is very, very unique and also very, very strong product proportion. So continue to remain positive on Nestle.
All right, gentlemen, thank you so much for joining in. So just to wrap up things, Nestle has reported their technically the fifth quarter of this financial year, because they've moved the calendar year to financial year. Numbers, revenue 9%, revenue growth 9%, which is higher than expectations. EBITDA at around 1337 crores, again higher than expectations, margins beating expectations by 100 basis points, and that percolating all the way down to the bottom line. There has been a mild reduction in gross margins quarter on quarter. That's understandable because of the inflation that we've seen in cocoa and coffee prices. But the management has navigated that by reducing other expenses. Decent commentary across portfolio, some silence on the infant nutrition business. But so far, the Nestle stock absolutely flat. The last couple of days, it was doing well. So maybe some bit of profit booking post that as well. And also, the street is hoping for some commentary coming in or some clarity coming in on this issue. So until there is more clarity, there could be an overhang.
Okay, all right. Well, let's now shift focus away from Nestle. Thanks, Mangalam, for that, to Syngene International. We have with us Jonathan Hunt to discuss the Q4 performance. Jonathan, hi, welcome to the show, and sorry about the delay. Well, before we get to the margins, which actually stood out this quarter for Syngene, I wanted to just touch upon the US biotech funding scenario. Has that improved on a sequential basis? How was it this quarter?
Oh, great question. So just before I dive into that, pretty good year overall. Quite happy with the top line performance of the last 12 months. Hit a bit of a speed bump in the fourth quarter. And that leads perfectly into your question. What's going on in US biotech versus major pharma? Simplistically, our business serves two client segments. There's the mega cap corporations, the Fortune 500 or so biopharma companies, well-funded, strong balance sheet, strong cash flow. They're really focusing very much on a geopolitical world, what's going on around China rotation, things like the Biosecure Act, a piece of legislation that's coming through in the US. But maybe we'll have time to talk about that later. And then, of course, there's a startup community. So US biotech startups, they live an existence where they're driving their innovation forward or they're fundraising, and they jump between the two with real frequency. It's not uncommon to be running a biotech and have 12, 24 months of cash flow, cash burn, and then you're back to the capital market. So the story really, we had a big peak a couple of years ago of the amount of money that was going into US biotech. That's driven some good growth for us because they spend that money in our sector as we provide support and service to them. And now they're going back to the capital markets. So we had a couple of things going on in our P&L in the fourth quarter. A number of clients, cancellations or delays because they couldn't get their funding through quick enough to spend it with us. And then if you step back and look at a sort of macro measure, we had 23 billion of new funding going into the US market in the fourth quarter of new capital raising. So that's a really healthy bounce back. That augurs well for the year ahead, but it'll be a couple of quarters before they go from raising the money to spending it with us. So that's why my guidance for the year ahead for Syngene is growth, actually stronger growth in the year ahead than we delivered last year, but I think it'll be second half weighted. Hopefully you followed up.
So you expect a recovery in the US biotech industry to probably, or the startup industry, the US biotech startup industry to probably be in the second half of the fiscal. But margins...
Actually, to be more precise, I'm seeing the bounce back now. It happened in the fourth quarter. It's happening now in fundraising. There's just a deployment lag. It takes them a couple of quarters before they start spending the money that they've raised.
All right. So it'll probably reflect in companies such as yours in the second half of FY25. That point's taken. Margins did very well for you all this quarter, 34%. Was there any one-off? What is the guidance? Is this sustainable?
Yeah. What's the only certainties in life? Death and taxation. So we were fortunate in the fourth quarter. We got a tax rebate back from the tax authorities. It's a tax case that's been going on for a while, so that gave us a boost at the bottom line. I wouldn't predict that for being a recurring event, but we'll see. And then underpinning it, there's some good operational margin improvements. We've been working hard on our operational efficiency, supply chain, more productivity, and we're just seeing a little bit of that being an ongoing benefit. But guidance for the year ahead, EBITDA margins pretty much in line with this year, plus or minus a percentage point. And at the PAT level, we think PAT will grow in the single digits in the year ahead.
How much can Zoetis scale up going forward, and what are the other tie-ups that one can expect this year?
Sure. I mean, you know, we're getting into a habit. You ask me the same question each quarter, and I duck it. We never comment on individual clients. But I'll give you a broader comment, because it's why we deployed capital on doing the Stellis Unit 3 acquisition in the year, is we think that there's a need for more capacity. We think there's certainly a need for more capacity in Syngene. The growth we've seen over the last couple of years in our biologics CDMO was pushing us right up against the ceiling of maximum capacity utilization. So that new capacity coming on second half of this year is a platform for growth, probably in revenue terms the year after. This year is just about getting it up to standard and getting it shown to clients. But even within that, the revenue guidance for the year ahead of high single digits to low double digits on a constant currency basis captures that opportunity in the CDMO space, but it's not solely reliant on the Stellis facility coming online.
Okay, well, we ask you every quarter about Zoetis because it's such a huge opportunity for the company. But Jonathan, having said that, I just wanted your thoughts on the US Biosecure Act, because I think you fleetingly mentioned it when you referred to it earlier. How big an opportunity would it be for a company such as Syngene, because we have the US elections coming up?
Sure.
Are you seeing any kind of benefits coming through already?
Yeah. I think the change states this. We've been talking, and you've asked me questions previous quarters about China plus one, supply chain, dual sourcing. I think the Biosecure Act has just taken the temperature up another level. And now what I'm seeing in clients, that's become a board level matter. It's become an audit and risk committee sort of discussion around where in the world do you get your support work? Where do you have your partnerships? And China's done a wonderful job over 20, 30 years building a very large ecosystem in life sciences, in pharmaceuticals and biotechnology. But there's now a question mark that I think is being played out in boardrooms. Do you want all of your eggs in one basket? Can you really, in a geopolitical world that is as it is, have an overexposure? And I think for the first time, I'm starting to see the beginnings of a structural rebalancing and a rotation. It won't all play out in 1 or 2 quarters. I think it's a trend that starts this year, but will run for at least the next 5 years. How is it manifesting in our business? Just more visits. In the last quarter, and I expect throughout the year, that we'll see more people coming, more expressions of interest, more audits, and more engagement. It's not turned into contracts yet, but it's got a different tone.
And finally, just before we let you go, another question for you to duck. Anything that you've spoken to Biocon about with regards to them looking at maybe monetizing some bit of their stake in the company?
Oh, that's a question for them. I mean, my relationship with Biocon's a great one. I mean, wonderful colleagues. We share a campus, and they're a client of mine, and we do great work for them as we do for all of our clients. But I'm sure you'll have somebody from Biocon on with their earnings call. That's the place to ask that question.
All right, Jonathan. Well, it's a standard 2-3 questions that we ask you every quarter in hope of an answer. But thanks very much for joining in and speaking with us. So that's Syngene. The stock is lower by around 0.6%. There was a revenue decline, but the margins did improve. They did have a tax refund this quarter, which aided their numbers as well. Well, we need to take a short break. On the other side, we will be talking to the Managing Director and CFO at Happiest Minds Technologies to discuss their new acquisition. Stay tuned.
Welcome back. It's earnings all the way. So let's get chatting with the management of Happiest Minds as well. We have with us, the management. It's also acquired 100% of Pure Software Technologies for about 780 crores. The acquisition strengthens their capability in banking, financial services, insurance, healthcare, life science verticals as well. Venkatraman Narayanan, who's the managing director and the CFO of the company, joins in. Thanks a lot, Mr. Narayanan, for joining in. First question, of course, the revenue growth rate of the acquired company, Pure Software, is strong. What are the margins, and will this deal or acquisition be EPS accretive?
This acquisition has been in the offing for a reasonable amount of time, but once we decided to go forward, we have progressed quickly on it. This is EPS accretive from day one, and as far as margins are concerned, we are in the silent period. I would like to stay away from giving that out right now because anyway, starting the first quarter of next year, this will integrate into Happiest Minds and the results will be published along with. But I would like to say that it's reasonably good margins and it's a healthy business. 351 crores in top line last year on a consolidated basis, and this adds to the size of Happiest Minds and helps us towards achieving our goal of that $1 billion by 2031, but also strengthens two of our key verticals, which is BFSI and healthcare. If you look at the business of pure software, almost 50% of it comes from BFSI and about close to 50 comes from healthcare. So it fits in very nicely with what we have been wanting to build internally. So in terms of a fit, it's a good fit, very good people, and it extends our family by additional 1,200 Happiest Minds.
Okay, all right. But what does this do to your long-standing margin guidance of 22 to 24%?
The current margin profile is close to what we are, guiding on an operating margin standpoint. The 20 to 24% that we have been talking about is EBITDA, but their operating margins is fairly healthy and close to what our numbers are. But integration builds in certain efficiencies. There is room for margin improvement. There is also the aspect of we need to see how we have to invest to get the companies to work together. So there are a lot of puts and takes that we need to go through in the next, let's say, 3 or 4 quarters. But the focus will be to obviously keep growing and not at the cost of profitability for sure.
Okay, and what are the performance-based targets on which you've deferred this consideration of 144 crores, which will be paid at the end of FY25?
This will be based on them achieving certain aggressive revenue and revenue growth targets and also margin targets. So it's split between revenue and margin, and that's how the deferred consideration is being structured.
Okay, and what will the revenue contribution of BFSI and healthcare increase to after this acquisition? Currently, it contributes around 15% each.
So we are currently, let's say, $200 million in size, approximately 15% coming from BFSI and 15% or 14% coming from healthcare. So that's about 30 million each. Now, this company is about $45 million in size, and half and half. So that gets added. So there is a pretty decent growth that you will see in both of these verticals, the BFSI and healthcare. Just to rewind a little, week back, we also announced acquisition of a learning edutech company, Macmillan Learning India Private Limited. So this is the ODC of the global large learning company. So it's not that we have not been looking outside of these two verticals. So that was a small, nice tuck-in acquisition that we did and got integrated, will get integrated soon enough. And that was announced last week. Now, this week, we are announcing this acquisition, which is adding, if you look at it, approximately $25 million each into healthcare and BFSI. I'm just giving an approximate number, 45 million, and give or take some growth numbers. It's about both of our BFSI and healthcare vertical will grow by about 25 million. And now you can work the numbers on how that will pan out on a consolidated basis for the next year, which I don't want to say now because then it would also you can work back guidance and growth numbers for the next year, which we'll hold on to after the first quarter results.
And what about the cash that's left on your books after this acquisition?
We had raised about 500 crores through a QIP last July, adding our internal accruals and IPO last year. We have cash balance of about 1,300 crores, give or take a couple of crores, because we also do quite a bit of working capital borrowing, not long-term borrowings, but working capital borrowing. So about 1,300 crores cash on the books. Post this acquisition, we'll be left with about 600 crores of cash plus quite a bit of undrawn lines of credit.
Okay, all right, Venkraman, we're going to let you go on that note, and congratulations on that acquisition. The stock is up around 0.5% post that news. We need to take a short break, but it's now time to shine a spotlight on the backbone of our economy. A celebration of your impact on India's success story. CNBC-TV18 and HSBC India proudly present India's biggest SME Awards platform, honoring the small and medium enterprises that drive our nation's growth. Nominations are open now, and we invite you to become an SME champion. Your dreams power India's progress, and it's time to celebrate them. Scan the QR code now and be a part of this monumental recognition at the SME Champion Awards. It's not just a platform, but an opportunity for you to step into the limelight.
Axis Bank, that's been the stock of the day through and through, with an uptick of nearly 6.5%. It's moved to the high point of trade, and it single-handedly powered the Nifty bank back into the green, with the Nifty back above that 22,400 as well. But don't lose sight of the broader markets as well. Vodafone Idea, from the lows of today, has seen a rally of nearly 16%. So the initial uptick on the stock was sold into by those who would have probably bought it for that arbitrage post the FPO listing today, and now that dip has been bought into. So from today's low, a near 16% jump on Vodafone Idea, the stock at the high point of trade. Giving it company are a lot of these other chemical names like Naveen Fluorine doing well. Rain Industries, a metal ancillary, had the high point, and we've seen a decent move from Trent as well. Trent has moved higher. Remember, they report their numbers 2 days later on Monday itself, so that's a stock we'll keep on our radar. With that, we wrap up on this edition of Halftime Report. But as we do that, here's an announcement that we'd like to share with all of you. Our upcoming live personal finance webinar, CNBC-TV18 Accelerate, will feature none other than top market expert Nilesh Shah of Kotak Mahindra AMC, who will answer all your questions on managing your finances. Also conducting a special masterclass on what not to do with your finances, the mistakes to avoid. Remember, that's more important than the mistakes you would commit. So keep an eye out on that one. It's CNBC-TV18 Accelerate, Personal Finance Handbook with Sonia Shenoy, which will also have 3 well-known experts. We'll dive into everything you need to know to master your finances, learn how to grow your wealth. Don't miss this chance on 11th May, 9 a.m. Limited seats. So what you do is scan your screens on the QR code which is there. Alternatively, log on to the CNBC TV18 website too. And we wrap up on this show of Halftime Report with Business Lunch, taking all the market action ahead.